Pierre. I'm the market lead for our tax and accounting division at Thomson Reuters in MENA. And so what people should do, anybody should do that, if they go over that $100,000 threshold to have to register for VAT, is a couple of things, right? So you have to assess how VAT will impact you as a business. That means you go through every single of your transaction, sales and purchase, and you try to work out how VAT will apply to them, right? And that, you don't have to be on your own to do that exercise, right? So you have to speak to your tax advisor, your accountant, whoever might advise you today, to be able to go through that exercise and work out, okay, this is how VAT will apply to whatever transaction I'm doing today, either selling something or buying something. That's really the first thing. Then you have to look at internally what are the areas that will also be impacted beyond just buying or selling anything. Pricing. How are you going to embed pricing, VAT, in your new price? Right? Because what people usually forget is if you don't have a provision in your contract that talk about VAT, what the government might do and say, I will treat every single contract after the 1st of January 2018 as inclusive of VAT, which means you lose 5% margin straight away if you don't have any provision in your contract for VAT. Right? So that, and then contracts, as I was saying, right? So do you have any contract that might span over from 2017 to 2018? How VAT would apply then? Is there any transitional provision in the law that might help you to deal with that, right? All these questions have to be answered. And you don't have to wait for the law to be out to do that. Because VAT is the same everywhere. That's the point. Right? So, of course, each country has their own legislation, but the principle of VAT and how to deal with it is the same everywhere. So you don't have to wait for the law to be finalized to do something about it. Because if you do that, and if the information is out 3 days before you have to start being VAT compliant, well, you're not in a nice position. Okay? And then, essentially, if you want to think about it, to be able to be VAT compliant, you have 3 things you have to do, nothing else. Right? Is being able to produce VAT compliant invoices. Right? So your invoice on the back of a pack of cigarettes isn't good anymore. Right? You have certain fields that are mandatory by the government that have to appear on every single invoice. If you don't do that, your clients will not be able to recover VAT on whatever they buy from you because your invoice is not VAT compliant. And if you don't know how to catch a VAT or non-VAT compliant invoice, you will not be able to recover any VAT you incur as a business when you buy something. Okay? That's the first thing. Second thing is being able to record VAT in your system on every single transaction that you do. Whenever you sell something, you have to be able to charge VAT or not, depending how that transaction should be treated for VAT purposes. And when you buy something, you have to be able to record how much VAT you've paid on that. Okay? That's the second thing. Third thing is, at the end of the month or the quarter, depending on your size, you just have to file a VAT return. That's it. Right? So it's not rocket science, but in order to get there and make sure that you don't have a negative impact on your cash flow, or you're not in trouble with the government from a compliance standpoint, you have to manage each of these steps properly. If not, you might be in trouble.